Good evening. Okay, back to business on Cognizant. We're going to prop up the numbers in front of you and focus on that with Gordon Coburn, the CFO of Cognizant. Great to have you on the show, Gordon.
Thank you so much.
Congratulations first. The first quarter traditionally is a soft one for most IT companies. Now, I notice you've beaten street projections, but the profit growth, if you look at it sequentially, is a tad soft, 1%.
Yes, so Q1 was solid. We came in with 43% growth, 4.6 sequential. But when you peel that back, North America did very well. But Europe was soft. Our European revenue only grew about 1.5% sequentially. And what we're seeing in the economy a little bit longer to come back. There were some budget issues in the UK government, some sovereign debt issues. But what's interesting is in the last 90 days, conditions in Europe have improved. So more recently, we are now closing deals, and we're actually feeling good about it for the back half of the year. But there was a lag effect in Europe, and so the growth is kicking in the back half of the year and the front half. But North America is very solid. It was solid in Q1, it's solid in Q2.
Right. What about the other markets like Asian, Latin America, and Middle East? That's looking soft as well. Are you investing more there?
Yeah. Those are still small for us. So Asia-Pac is only about 3% of revenue. It was down very slightly in Q1, but that's the law of small numbers. We're investing very heavily there, feel good about those markets. But when I think about the drivers for this year, the big drivers are very solid North America and Europe. We're now signing deals that'll be ramping up in the back half of the year. And that's what's going to be driving our growth, the reason we increased our guidance quite substantially today for the full year.
And that brings me to guidance as well. With your projected guidance, you're going to beat Wipro or overtake Wipro as India's third largest IT exporter. That's on track.
What we focus on is we want to have industry-leading revenue growth. We've done that year after year. And the reason we do that is we keep our margins a little bit lower than our competition to reinvest in what our customers are looking for, which is the deep consulting capability, the deep industry knowledge. And as a result, we're growing faster. So over time, we may pass competitors, but the way we measure success is, are we growing our top line materially faster than any other major player in the market? And we've done that year in, year out, and we certainly expect to do that again this year.
Your margins are widened as well considerably, 20.4%. You maintain your forecast of 19 to 20%, I believe, for the rest of the year. Now, the overhead costs as well have surged about 42% within this quarter. So 1 to 20% margin makes sense coming forward?
So in we target 19 to 20% operating margins. We've done that for years. We take anything above that and reinvest it into top-line growth. In Q1, we overshot the goal a little bit. That was intentional. Very simple reason why. Our salary increases kick in next quarter, or in the second quarter. So we want to make sure that we have the margin to fully absorb the salary increases while still staying in our target range. And we're very comfortable with that. We guided today that with salary increases, we expect to be in our target range for the second quarter and the full year.
Okay, let's talk about verticals as well. Before I go back to the attrition and issues around that, I know you've hired 7,200 employees, taking it to 111,000. But I just want to go to the verticals. Of course, the financial services is the strongest one. How do you project that as well as the healthcare verticals moving forward for you?
Yeah. So across our industries, business was good. They all grew. The one that really stood out was manufacturing and retail. That grew almost 13% sequentially. We've won a lot of accounts there. They're still in the early stage of ramp up. So that was the one industry that stood out. But one of the things we're pleased about is as we're growing, as we've guided to at least 29% revenue growth this year, I expect that growth to be supported by all of our industries, not just one customer, not just one industry, but very broad-based.
But what are the power drivers in your verticals right now?
Sure. So across our industries, what's driving growth is spending on discretionary spending. So clients have always spent on cost savings and being more efficient. What we're seeing clients now spend on is innovation and growing their own top lines. And for that, you need to be able to do the front-end consulting. You need to be able to do the discretionary development. Our development business grew almost 60% year over year in the first quarter. So the big driver right now is discretionary spending on innovation and revenue growth for our clients.
I know this is not directly related to you, but your model compared to Infosys, which has undergone major restructuring in the recent few days. How do you compare that? Because traditionally people say Infosys offers a wide array of services to multiple clients and marquee clients especially, but companies like yourself, Cognizant, really does that product engineering, infrastructure development, so it really comes to the niche of breaking up everything from cow hours to probably product replacement parts.
When I look at our offshore competitors, they are incredibly well-managed companies, very well operated, but following a fundamentally different strategy. They tend to be more focused on maximizing margin. We're more focused on a stable margin and maximizing revenue growth. And as the market is evolving and our clients are expecting deeper understanding, that we better understand their industries, we're well positioned to do that because of these investments. And that's why more often than not, we're now competing with the multinationals who also have that very deep industry knowledge, and less often with the offshore players. But these are very well-run companies, but following a fundamentally different strategy.
One of the worries as a chief financial officer must be, Gordon, the health of a dollar. And it's been weakening of late. How are you managing with those projections? I know in the last 24 hours with Bin Laden's death, there's been a flight to safety in the dollar once again. But the macro condition seems underlyingly weak.
So let's break it into two pieces. From a revenue standpoint, what matters to me is the euro, the pound, and the Swiss franc. And that about 15-20% of our revenue is exposed to that. So it's not a massive exposure. It moves it a little bit. The impact of currency in the first quarter sequentially was 0.2%, so very small. What matters, what is important, is the exchange rate between the U.S. dollar and the rupee, because a lot of my expenses are in rupee. However, we have one of the most aggressive hedging programs in the industry. We have over $2.8 billion of outstanding hedges against the INR going out through 2014. So we're not completely insulated, but significantly insulated from movements in the rupee due to our very aggressive hedging program.
So you do sleep at night?
I sleep well at night, yes.
Okay. A quick question on Genpact, and I know I pose this to you every quarter, and you deny it every quarter, but the tables seem to have turned right now, Gordon, because Genpact itself announced a massive acquisition, headstrong. Who would have thought that coming? And now it's competition for you, really, in the IT BPO's financial services space.
I think that was an interesting acquisition because it reaffirmed what I've believed for a long time, that there are very significant synergies and needs to integrate BPO and IT. And we're seeing very strong demand for our BPO business. It's doing quite well. And the reason for that is clients like the fact that we can offer the transaction processing, but also apply technology improvements to capture productivity. So their acquisition made sense. Now the question is it of a significant enough scale that you can really compete in that integrated IT BPO world? But from a strategic standpoint, it makes sense. From Cognizant's standpoint, organically, we're in quite good shape.
So you're not hunting for outside opportunities?
Nothing. Yeah, we always look for small tuck-under acquisitions, but we stay away from very large acquisitions.
But Genpact now is completely off the radar?
That would fall outside the size of acquisitions that we focus on.
Fair enough. Gordon Coburn, many thanks indeed for speaking with NDTV Profit. Good luck going ahead. It seems like you're poised to be the third largest Indian IT exporter in the next quarter when we get it back on the few hours. Thanks for watching NASDAQ Live. See you back tomorrow.